What's going on, guys? Welcome back to another video. So in this one, I have some very important information that you guys need to understand going into next week's trading week. We're going to be going over what the overall market is looking like right now so that you guys can prepare yourselves for any trades that you are needing to take or want to take going into this next week. We're also going to be going over the probabilities of that 75 basis point rate hike coming in September. That probability is significantly increasing here. We have some huge catalysts coming up this week and some statements from the Fed that we need to go over because they're essentially casting out more uncertainty into the overall market. So guys, before we get into all of that information here, if you guys do enjoy the information and analysis that I provide for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into it here and take a look at what's going on with the overall market. Now, when we see price action like this and we're looking at our key indicators here, what I like to call this is no man's land. We've seen this little cross down on the daily time frame here with 1348, the most profitable EMA crossover. And we're also starting to see the MACD showing a little bit less bearish momentum. It's losing that bearish momentum here. We now have RSI, the relative strength index, above its moving average and slowly starting to crack that midpoint of 50. So what we're seeing here in general is a little bit of market relief going into some of these pretty important catalysts. Again, we've talked about this a lot, but those options coming in, the short interest coming into the overall market, if we do see the market start to stumble back to the downside, it will create another one of those snowballing effects. And I don't think it's out of the question that we do break that 390 if we start heading lower again. But on the other side too, remember, we were talking about the market essentially being at this point right here with that little pyramid where if it starts to get pushed in either direction, it's going to be a little bit of a snowballing effect. And on the upside, you could see a lot of those options getting sold, the dealers unhedging those hedges or those short-term short positions that they needed to hold in order to maintain that delta neutral status, and overall shorts starting to get out of some of those positions. But again, guys, before we go any further, I do also want to highlight some of our members here with 1348 El Presidente killing it this last week with the best trading tools that retail investors have access to. Pythagoras and Invictus, those predictive algorithms are absolutely nasty. Black Betty killing it again this week as well. So again, we have some awesome things coming for you guys in the near future. I can't wait to show you what we have cooking. And so guys, if you are interested, make sure you check out that link down below. But let's kind of continue here and talk about what is going on with these rate hikes. The target rate probabilities for the September Fed meeting, 91% chance that we get that 75 basis point rate hike. Now, again, the rate hike itself isn't necessarily the most important indicator. Again, with what we're seeing here, with what the market is pricing in, a 75 basis point rate hike would come as no surprise. So what we need to think about is, well, as we're going into this next week, what is the CPI data going to tell us? And what could that lead Fed Powell to say at this Fed meeting that is going to give us a little bit more guidance going forward? Now, the catalyst that we have this week that's really going to give us that indication is on Tuesday at 8:30 a.m., we're getting the consumer price index, the CPI data. Now, with CPI coming out this week, we've talked about this briefly, but the trend that we have seen is oil prices, gas prices have started to come down over the last month. So it's very possible that we have a little bit of a beat on the consumer price index data that comes out on Tuesday. There's a very, very fine line, though, that the Fed has to walk here, because even though a lot of these oil prices have come down and are going to affect these CPI numbers, there is no reason why oil can't just start skyrocketing back up. Remember, Russia just cut off supply to Europe for a lot of energy, and Europe does get, I believe, about 40% of a lot of their energy from Russia. So what happens then is eventually they're going to have to start dipping into other markets, draining that supply, and then we start to see prices start to come back up. Combining that with OPEC cutting output, kind of playing these political games in the global political landscape here, does provide an opportunity for oil to start really skyrocketing again as we get into those colder months. And as that happens, well, you're going to see the cost of things start to continue to go back up because of the fact that even though oil doesn't make up the largest percentage of CPI and what the calculations are, oil is a key component of a lot of the other aspects in CPI. So if oil starts to come up, well, you're going to see the cost of a lot of other things start to increase as well. Now, what I also want to briefly cover here are some of the statements from from the Fed that were made last week so we can get an indication of what they are thinking before their little blackout period. So Chicago Federal Reserve Bank President Charles Evans said on Thursday next week's inflation report could be informative on how much the Fed should raise interest rates next week, with his attention on how broad inflation pressures remain. If I saw inflation maybe cooling a little bit, that's not going to change the fact that I still think we are going to need to top out at something like 3.5% to 4%, meaning the Fed's target rate. It's just that maybe we don't have to do it that soon. Now, along with this, there are a couple of other statements that were made by some of these other Fed officials that we need to take a look at as well. That is kind of not guidance, saying to not say guidance, but it is kind of giving us an area of guidance here that we need to take a look at. So coming over here to Fed Waller's statements here, on Friday, he echoed recent sentiments from his colleagues, saying he expects a big interest rate increase later this month. Obviously, he also said policymakers should stop trying to guess the future and instead stick to what the data is saying. Now, we've seen in the past when the Fed tries to give guidance, inflation is transitory, how that really goes, and it kind of deteriorates the public sentiment going towards the Fed. But what you can also read this as is that the situation is ever changing. There are a lot of different moving parts that the Fed is essentially just raising these interest rates, hoping that the data comes in their favor and that what they're doing is actually working and then going accordingly. But what happens when the data doesn't start to go in your favor? Now, this is kind of what we were referring to earlier when, yes, we are seeing these gas prices come down. We are most likely going to see a little bit lower CPI than what a lot of people are going to expect on Tuesday. That is kind of the consensus in the overall market. But as we get into those winter months and as oil starts to come back up, well, you're still going to see rising unemployment, but you could also start to see rising inflation again, just based off of the amount of an effect that oil has on so many other components that make up CPI. The other thing that we have to talk about here in terms of data is the unemployment rate. Well, in August, the unemployment rate rose by 0.2 percentage points to 3.7%. So you are seeing these unemployment numbers start to curl back up. Now, when you take a look at this Investopedia page right here, economic theory suggests that the rate of inflation rises as the unemployment rate falls. Inversely, as the inflation rate would fall as the unemployment rate rises. So as you start to see unemployment start to come up, you could end up seeing the inflation rate start to come down. But what does this mean for the overall market since we have so many moving parts going into this CPI report and the Fed meeting coming at the end of September? Remember, September is notoriously one of the worst months for the overall market. So when we look at the overall market here and kind of get an indication of and refer back to some of the statements that we were making earlier, well, we're in for a decent amount of chop. We're going to see some good news come out. We're going to see some weird oil news with this energy crisis come out. We're going into Powell with the Fed. We have CPI data coming out, more jobs numbers coming out. There is going to be a lot of moving parts here. So you have to think about the market right now and your strategy in two different ways, a long-term portfolio and a trading portfolio. So if you have a long-term portfolio, it really doesn't matter what happens in the short term here. If you have a dollar cost averaging plan and your long-term investment outlook is 10, 15, 20, 30 years. But if you are trying to get into trading and you're looking to take advantage of these short-term volatile moves in the market, well, you're going to need to have a very, very solid plan going in, very similar to what all of our members in our private group have every single day, that are going to show you and lead you to, well, this is how we're going to make these quick gains, taking these base hits out of the market every single day. So again, guys, if you are interested in coming in there with us, make sure you guys check out that link down below. But other than that, that is what I have for you guys in this video here. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys had a great weekend. I'll see you guys tomorrow bright and early on that live stream. Other than that, peace.